This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com. Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
Global hotspots: Ukraine, Venezuela, Thailand. Anti-government protests in 3 countries on 3 continents. So far, pictures like these haven't rattled global investors much, but that could change. We've got portfolio advice for you.
The great rate debate. Do some members of the Federal Reserve want to start raising interest rates sooner rather than later? We have the minutes of the central bank's last meeting.
And energy spike. It's not just the brutally cold winter sending the price of natural gas to 5-year highs. It's also supply. So what happened to that glut of gas, and how high will prices climb? All that and more tonight on Nightly Business Report for Wednesday, February 19th.
Good evening, everyone. Topping our news tonight, violent revolutionary protests erupting around the globe. Anti-government demonstrators have taken to the streets in Ukraine, Venezuela, and Thailand. Investors everywhere are closely watching those deadly clashes and hoping things will stabilize, especially as European officials meet tomorrow for an emergency session in Brussels. Now, the biggest hotspot, Kiev, Ukraine. There's no let-up to the violence and the death toll in that city's Independence Square as protesters who want closer ties to Europe and the U.S. but clash with others who want to be aligned with Russian-backed government. In Washington today, President Obama warned Kiev of consequences over the escalating violence there, saying the military should not engage in a situation that can be resolved by civilians.
The United States condemns in strongest terms the violence that's taking place there. We have been deeply engaged with our European partners as well as both the Ukrainian government and the opposition to try to assure that that violence ends.
That tough talk may have worked. Late today, a truce was declared between the two sides in the Ukraine, calling for the beginning of negotiations aimed at ending the bloodshed. But no signs of peace in Bangkok. Protesters there battled riot police as they try to oust Thailand's prime minister amid accusations of corruption. And in Venezuela, a sea of white as tens of thousands marched against the government, angry about the killing of protesters last week and the arrest of the Harvard-educated opposition leader, Leopoldo Lopez. Government supporters were also marching, calling the protesters traitors.
One American company says the political and economic turmoil in Venezuela will cost it. Colgate-Palmolive warned it could book one-time losses of up to $200 million, or 19 to 20 cents a share, because of currency moves the Caracas government put in place covering foreign businesses. Procter & Gamble previously trimmed its fiscal 2014 profit forecast because of the devaluation of Venezuela's bolivar. Colgate finished the day lower. P&G closed higher.
And a warning today to all emerging markets from the International Monetary Fund. It said developing nations, India and Turkey in particular, need to tighten up monetary policies and make some structural economic changes to settle market turmoil and stave off inflation and the even greater threat of deflation in Europe.
Joining us now to talk more about what the political and economic unrest might mean for markets large and small around the globe is David Kelly. He's Chief Global Strategist at J.P. Morgan Funds. David, how much, if at all, do I need to be worried about what I'm seeing in the Ukraine, Thailand, and Venezuela?
Yeah, I don't think investors should overreact to this. There are specific political issues in each of these countries which are all quite different. And I don't think they really talk or speak to a systematic problem in emerging markets. And if you look at Turkey and India, I know the IMF say they need to tighten monetary policy. Well, they have been tightening monetary policy. And in fact, we've seen some stabilization in the last few weeks. So I think that the biggest mistake investors could make here is overreacting to these events and staying out of emerging markets, which I still think are a very good long-term investment.
All right, so right now it seems like okay to you, but could it possibly develop into a much more volatile situation, in which case, what is the contagion risk?
Well, I think that's really why the fact that there are more political issues than economic ones is so important. This is not because they've got so much debt in most cases. It's really because of political disagreements in Thailand and Ukraine, and then very irresponsible economic policy also in Venezuela. But it doesn't sound like a global financial crisis in emerging markets. And remember, last year, while the US equity market went up by 32%, emerging markets actually went down by about 2%. So over the course of a year, we've devalued emerging market stocks by 35% to US stocks. You've got to ask yourself, well, in the long run, did things change that much? I mean, what this has left, it's left emerging market stocks looking very cheap by most metrics. And I think long-term investors should think long and hard about avoiding that area. I think it's actually a very good area for long-term investment.
So you say buy?
Yeah, absolutely. Buy for the long run. I mean, I don't think you should invest in stock markets for short run. I think in the long run, there's a lot of opportunity in emerging markets, but you need to do it with don't just pick a country, and also do it with a good investor who knows how to miss some of the potholes.
So
here, because there are plenty of potholes in emerging markets.
Buy a fund, buy an ETF, and play the demographic play, which favors the emerging markets.
I think a fund more than an ETF, because an ETF is going to be forced to mirror some indices which in some cases are dominated by commodity companies or state-owned companies in some emerging markets. But a good, well-managed emerging markets fund, I think, should do well in the long run.
Let's bring it back home here. There have been a lot of concerns about what's going on with the U.S. economy, also concerns about today, some of these minutes that came out of the Federal Reserve. How is the U.S. economy doing? It seems like all the data we've been getting recently has been tainted by the bad weather. Is that something temporary, or is there something more long-term going on here?
Well, I hope the weather's temporary. I mean, we're building an igloo out in our backyard right now. But when the weather lets up, I do think the economic statistics will get better. As we look at them, there does seem to be a little bit more than just weather in the last few months. I mean, we're not seeing enough perkiness in the housing numbers, the auto sales numbers. I do think that some of this is part of a long-term slowdown in the supply side of the U.S. economy. But still, I think things will pick up after the weather clears here. And most importantly, I think growth will be strong enough to keep the unemployment rate coming down, to keep interest rates moving up, to allow earnings to rise somewhat. So I still think it means rates will be higher this year, and probably U.S. equity prices will also be higher. So it's still time to be a little overweight equities versus fixed income within the United States.
David, thank you very much. Common Sense tonight from David Kelly, Chief Global Strategist at J.P. Morgan Funds.
On Wall Street today, stocks sold off in the final hour as investors got spooked after the release of the minutes from the Federal Reserve's last policy meeting. Comments from policymakers revealed little consensus on the direction of interest rates and doubts on the Fed's timetable for tapering its stimulus measures. The Dow lost nearly 90 points. The Nasdaq fell almost 35, ending 8 days in a row of gains, and the S&P down 12 points. Over in the bond market, those Fed fears sent Treasury prices lower and yields slightly higher. The yield on the 10-year note rose to 2.74. Steve Leisman has more now on those Fed minutes and what's next for the nation's central bank under new chair Janet Yellen.
The Federal Reserve gave a hint today of what it would take for them to stop reducing the amount of bond purchases it makes, and the bar seems pretty high. In the minutes for their January meetings released today, a number of the members said they would only stop tapering, quote, if the economy deviated substantially from its expected path, and that's for stronger growth in the year ahead. And that's similar to new Fed Chair Janet Yellen's recent comments before Congress that it would take a notable change in the forecast. I asked San Francisco Fed President John Williams today whether a weak February jobs report, that would be the third one in a row, would be enough to stop the taper.
In my view, the hurdle is pretty high on changing the pace of the step downs in our purchases that we've started back in December. I think that the economy has improved quite a bit, and we again want to take this medium term look, and unemployment's down to 6.5%.
The Fed minutes show that the central bankers discussed the weather and said the weak December jobs report was likely the result of inclement weather. Meanwhile, the Fed had a robust debate about how to communicate its intentions to keep rates low for a long time. The Fed had said it could consider hiking rates once the unemployment rate fell to 6.5%. But it's already fallen to 6.6, and the Fed doesn't seem ready to move. There was also considerable concern about low inflation rates, with some officials suggesting that if it doesn't move up sometime soon, the Fed might consider halting the taper. That was the doves on the committee. The hawks on the committee, they fired a shot of their own, with some saying they could see raising interest rates even before the middle of the year. But that right now is not the consensus of the committee. For Nightly Business Report, I'm Steve Leisman.
Disappointing housing data in January did not help the market's tone today. Construction on new homes recorded their biggest drop in nearly 3 years in January, tumbling 16%, with builders putting the blame on harsh winter weather. And the number of permits filed for future construction also fell last month That was the third month in a row for that.
Also moving higher, the price of oil. Crude oil closed above $103 a barrel today, the most in more than 4 months. Fueling the price hike, forecast for more cold weather, which boosted demand for home heating oil.
And it's not just crude prices that have been moving higher. Natural gas prices hit a 5-year high today, up a staggering 43% so far this year, and crossing the closely watched $6 mark. Jackie DeAngelis has more now on why consumers will be paying more for nat gas.
Natural gas futures up more than 10% today, crossing that critical $6 level. We haven't seen these kinds of prices since December of 2008. Now, the dramatic move puzzling some traders early on because nat gas's recent swings have been weather-related, but the extreme cold letting up, at least for a bit. So why are prices spiking? Well, some say it's because the damage has already been done. The polar vortex has caused nat gas demand to spike, which has taken supplies down several weeks in a row.
What was considered a glut of natural gas has vanished. And right now we have already now certain sort of logistical issues that come with as far as delivering the natural gas and giving people reason for concern.
The nature of the supply declines reported have been roughly twice what they were at the same time last year. Now, tomorrow, the Department of Energy will release its storage report for the week ended February 14th. Once again, traders saying it's likely that the drawdown in supplies will exceed their expectations, and that spurred buying in the pits today. Meantime, the break from the cold may be brief. Weather models suggesting that the rest of February and much of March could be very frigid. So what does the future hold for nat gas? Well, some are saying not to be surprised if it reaches $7. That's because when the extreme cold finally does let up, there won't be a lot of catch-up time before the severe heat starts this summer. For Nightly Business Report, I'm Jackie DeAngelis reporting from the NYMEX.
Now, coffee prices are also spiking, but for a different reason, and it could mean you'll be paying more for a cup of joe. We'll tell you why a little later in the program.
Rising prices, stagnant wages, higher mortgage rates, just some of the challenges U.S. consumers are facing right now. And a lot of food and personal care product makers are focusing on how to keep those consumers happy and sales growing in this difficult environment. Sarah Eisen has more from Boca Raton, Florida, where industry leaders met at a conference of the Consumer Analyst Group of New York.
They're the companies behind your everyday items: food, detergent, toothpaste, and tobacco. Here to talk about the industry and the challenging state of the American consumer.
The consumer is still pretty fragile. You know, it's interesting. As you said, we play in a broad range of categories. If you look at our categories, add them all up, the last 6 months they were about up a point, which is kind of what historical trends have been. If you look at the last 3 months, they're flat. So things have flattened out as retailers are discounting more to get traffic into the stores.
Executives here are downplaying the weather impact, and instead they see weak consumer spending, sluggish incomes, challenges from emerging markets. And they're focused on innovation, including Coca-Cola's new partnership with Green Mountain Coffee to launch Keurig Cold, a brand new category of do-it-yourself drinks.
We don't know exactly how big it'll be. We do know that cold beverages are 4 to 5 times the size of hot beverages. So we're in the hot beverage business today, and we think it's a substantial market.
Even Hillshire Farm, the company behind Jimmy Dean's Sausages and Sara Lee Deli, is intensely looking for new products and new flavors.
We have other businesses or smaller businesses that have been more challenging. We have a corn dog business called State Fair that's had new competition. And our philosophy there is, hey, let's win our way out of this through innovation and brand building as opposed to price-based competition, which is really the place we'd rather not go.
And Hershey's here today announcing a new brand called Brookside with new products like Crunch Clusters. So plenty of excitement around innovation for consumer categories in what's been a pretty less than exciting environment for consumer spending. For Nightly Business Report, I'm Sarah Eisen.
And still ahead on the program, who controls the internet? Regulators want to propose new rules to make sure some content isn't blocked, and the outcome could impact everyone who clicks and logs on. Rules for so-called net neutrality got a reboot today by federal regulators. They want to make sure all the content streamed into your home is treated the same. Julia Borston has more on the new approach to an open internet and what that means for companies and consumers.
FCC Chair Tom Wheeler is taking a new stab at rules to protect net neutrality. The idea that internet service providers like Verizon, AT&T, Time Warner Cable, or Comcast should not selectively block or slow web traffic. The commission does not plan to appeal a court's decision on the FCC's lawsuit against Verizon, which effectively threw out many net neutrality rules. The FCC saying that for now, it will not look to reclassify broadband as a public utility, what some analysts call the nuclear option, because it would give the FCC more power. Now the commission is justifying net neutrality protections with a different part of the law.
They believe they still have sufficient authority to be able to protect against any of the potential abuses that people had been worried about that were the basis of net neutrality in the first place.
The commission is soliciting public comment on its new guidelines, focusing on transparency and making sure consumers can access all lawful content. Chairman Wheeler does not seem to be trying to regulate more strictly than the prior rules, a win for internet providers. This comes amid controversy about Verizon Fios slowing Netflix streaming speeds, a part of internet service not directly connected to net neutrality rules. But the FCC's comments indicate intent to ensure weaker operators or potential competitors like Netflix don't face discrimination.
This probably chills the whole idea that carriers will start to charge Netflix. It doesn't necessarily prohibit it, and it also doesn't prohibit charging consumers for using Netflix.
Key leverage Chairman Wheeler is holding on to, the potential to reclassify the internet as a utility, which could keep internet providers walking on eggshells to avoid triggering additional oversight.
And Julia Boorstin is with us now to discuss a big late-day acquisition. Facebook is buying WhatsApp for $16 billion. That's a mobile messaging service. So Julia, let's start. WhatsApp, what's up? I mean, why is Facebook spending so much money for a service that basically gives you free text messages?
Well, $16 billion, you're right, Tyler. This is Facebook's biggest acquisition by far. Comparatively, Instagram, that only cost $1 billion. But WhatsApp is valuable because it is massive. It is the leading mobile messaging service. It has over 450 million people using the service every month, and the engagement is high. 70% of those 450 million use it every single day. It's also growing incredibly fast, adding 1 million new active users every single day. So Facebook is drawn to the engagement and also to the massive scale. Mark Zuckerberg said in the press release that he expects us to quickly hit 1 billion users. So Tyler, when Facebook wants to make sure it really holds on to those valuable mobile users and also those valuable teens, they see WhatsApp as a potential rival and now a useful way to hold on to those users.
So, Julie, you just said rival, and, you know, that is the whole name of the game in this business. Everybody is trying to get a position on this very competitive landscape. So how does this position Facebook better against its competitors?
Well, it really shows that Facebook is willing to spend big money, $16 billion, to hold onto that mobile and particularly that younger user base. So we're talking about teens here. WhatsApp is incredibly popular overseas, and it also does have a business model. They do charge some of their users $1 a year, and it shows that Facebook really wants to be at the cutting edge in the future of mobile messaging.
All right, fascinating development. Thank you so much, Julia Boorstin reporting from Los Angeles. And as Julia just mentioned in her internet story, one of the service providers includes Comcast, and we just want to remind you that's the parent company of CNBC, which produces this program.
And we begin tonight's market focus with an earnings beat out of Tesla. After the market closed, the electric car maker saw strong demand for its Model S electric car. It delivered nearly 7,000 of them in the quarter. That's a record for the company. Tesla also said it expects to deliver over 35,000 of those cars in 2014, a more than 50% increase from just last year. Shares initially spiked after the bell. The stock ended the regular session, though, down 5% to 193.64. The grocery retailer Safeway is in talks with private equity firms about a possible sale of the company. There is buzz that Cerberus Capital Management is exploring a deal for all or part of the second largest U.S. grocery company. The firm also reported fourth quarter sales after the bell, but they were shy of estimates. Shares initially rose on the news of that possible sale. The stock ended the regular day up 1.5% to $34.61, but you can see the jump after hours. Kay Jewelers' parent Signet is buying smaller rival Zale in a deal valued at about $1.4 billion in total. The marriage of Zale and Signet, which also owns Jared, the Galleria of jewelry, would give the combined company a 16% share of the specialty jewelry market and, according to the CEO, will give consumers more choices.
We believe by making a strategic acquisition, a transformational acquisition such as this, that we're going to be able to give our customers, much better in innovation by doing more research and development, and ultimately it's going to lead to more choices for them.
Shares of both companies surged on the news. Zale up 40% to $20.92, and Signet rose 18% to $93.65.
Eli Lilly rose on news that the company's experimental cancer drug significantly improved survival rates in lung cancer patients. The treatment, which some think could be Lilly's next blockbuster drug, has already shown success in treating stomach cancer. Shares rose 5% to $58.09. And shares of Garmin also up sharply. Investors snapped up the stock on news of better-than-expected earnings and sales. Surprisingly, it wasn't the traditional GPS systems that drove the navigation company's positive results, but it was stronger demand for aviation and fitness-related products. The stock surged more than 9% to $51.55.
Get ready, perhaps, to pay more for a gallon of milk, as much as 20% more, as soon as next month. Analysts say strong global demand, especially in China, coupled with a drop in milk production overseas, has led to a sharp increase in U.S. dairy exports, and that means higher prices here at home.
Well, milk is one thing, but coffee is another. The price of your Morning Joe is about to get a big jolt. Supply concerns in Brazil, this is the world's #1 supplier, means Java junkies could expect prices to percolate higher very soon. Jane Wells reports.
Blame it on Rio. Quote, Brazil is the name of the game when it comes to coffee, one broker tells Dow Jones. And the weather has been too hot and too dry at a critical time for the coffee crop down there in the world's #1 coffee producing country. Coffee futures making another strong run on Wednesday, way up to over $1.68 a pound. This on top of the biggest jump in prices yesterday since 2004. Prices have shot up this year after a nice steady decline during most of 2013. Now, some expect coffee futures could hit $2 a pound until traders get a better idea of how the weather's going to play out. Though the Wall Street Journal reports 10% of the crop in Brazil may not be salvageable at this point. 1/3 of the world's coffee comes from Brazil, and 2014 has been the driest so far in 3 decades. As for coffee retailers, well, if the crop turns out to be significantly reduced, this will impact them once they start contracting in a few months, and then eventually the prices will go up and impact you, or at least me. For Nightly Business Report, I'm Jane Wells in Los Angeles.
The always caffeinated Jane Wells. Coming up, when Walmart reports earnings tomorrow, the new CEO will speak for the first time as head of the world's biggest retailer. What will he say? What do investors want to hear? In an all-employee call today, the CEO of The Gap announced that the company will raise the minimum hourly wage U.S. employees get to $9 this year and $10 next year. The move will cover all of its brands, and the CEO says it will benefit about 65,000 hourly employees.
There is now an actual price tag attached to that massive data breach at Target. $200 million and counting. That's what it is costing banks and other financial institutions. That's according to the Consumer Bankers Association and the Credit Union National Association. The two groups also say that more than half of the 40 million compromised credit and debit cards have now been replaced.
Meantime, the world's biggest retailer is preparing to release its latest quarterly earnings on Thursday, and investors are bracing for some sobering news about retail spending, but they're hopeful for a better outlook from Walmart's new CEO. Courtney Reagan has more.
Walmart will release earnings tomorrow morning, but Wall Street got a peek into its bah humbug holiday quarter when the retailer warned its fourth quarter profit would be at or slightly below the low end of its previous forecast, leaving investors waiting to hear what new CEO Doug McMillon says about the company's outlook. While he wasn't yet overseeing the company during its holiday quarter, McMillan will lead the retailer's pre-recorded earnings call Thursday morning, as the company's shareholders wonder how Walmart will deal with a very difficult environment.
Gas prices are starting to head up a little bit. Weather is impacting everybody in retail, and most of all, we just have a consumer at the low end that has been struggling for a number of years and doesn't seem to be getting really any benefits from any of these real improvements in the economy that we're seeing.
While not everything seems to be working for Walmart, the retailer has repeatedly touted its small format stores as a point of success, announcing plans to add up to 150 more of them this year. While Walmart has traditionally grown by opening more stores, Credit Suisse analyst Michael Eckstein says the world's largest retailer should accelerate its small format store growth by buying Family Dollar. Credit Suisse research shows Family Dollar locations have the least overlap with Walmart compared to other dollar stores, which would mean a lower risk of a deal being blocked by regulators. Plus, nearly a quarter of Family Dollar stores are in large urban markets, areas Walmart has had a hard time breaking ground. Financially, Walmart could buy Family Dollar, but MKM Partners Patrick McKeever says some investors want to hear about a slowing of square footage growth so the retailer can return more cash to shareholders. While few analysts expect any dramatic announcements in Walmart's earnings release, many are hoping McMillan has something planned to ignite sales growth soon. For Nightly Business Report, I'm Courtney Reagan.
And that is Nightly Business Report for us tonight. I'm Susie Garrett. Thanks for joining us.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody. We'll hope to see you back here tomorrow night.
Nightly Business Report has been brought to you in part by
TheStreet.com. Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. Violent anti-government protests in Ukraine, Venezuela, and Thailand have investors on edge about the impact on the global economy and whether to invest in emerging markets. On Wall Street today, stocks fell after minutes from the Federal Reserve's latest policy meeting showed that the Fed will continue to taper its stimulus plans as long as the economy improves. The Dow lost nearly 90 points, the Nasdaq fell 35, and the S&P was down 12 points. A setback in housing. Construction of new homes fell 16% in January, the biggest drop in 3 years. And get ready to pay more to heat your home. Forecasts calling for more cold weather sent natural gas prices to a 5-year high. And be sure to tune into Nightly Business Report right here on your public television station.